have zero respect for Cathie Wood. I don't think she's an investor. I think she and Jim Cramer are the dumbest people that have a camera on them. And some of you might be watching and thinking, that's ironic because I think Paul's the dumbest person that has a camera on them. More power to you. What I'm here to do is talk about Cathie Wood's assessment of Tesla and what needs to happen for this to happen. Now, some two caveats here. First, if you don't believe that every investment is the present value of all future cash flow, unsubscribe from our channel and move on from this video. If you just don't believe that, I can't tell you anything. I believe that when you pay the price today for something, your return is going to be based on the return of the cash flow you get in the future. It could be zero all along the way until the very end, but there's still some sort of present value of those cash flows. And two, when you buy a stock, you're buying a piece of a business. When we look at companies, we sit there and say, if I can pay a reasonable price for a business, and the business grows, my returns will likely go alongside the business's growth. Very simple. And I want to call out one other thing. Cathie Wood believes in disruption, right, Mo?
Yep.
She said her base case for Tesla in 2027 is 1,400 and a high range of 2,500. What's she been doing lately with Tesla?
Selling.
Selling shares.
Wonder why. I mean, if I knew the stock was going to go to worst case scenario 1,400 and the stock was $251, I would be sitting on that thing so happy right now and so confident.
The whole point is, even if she was wrong on this and changed her mind, fine, it's worth 500. Would you still not pay 250 for something that's going to go to 500 the next 4 years?
100%.
This is what I don't like about these hypesters. She believes in buying disruption. Guys, I believe there's a price to be paid for disruption and there's a price that's too high for disruption. I'm here to appeal to people who go, wait a second, that does make sense. I'm not asking you to agree with me 100% here, but to, like in our community here, people all the time will say, Paul, I disagree with you based on this, that I think Tesla can grow at this rate. Great. At least they're saying, I believe the growth rate's going to be higher than what you think. Right. Awesome. At least it's based on some sort of present value of a future cash flow.
Not just saying this is disruptive and this is going to be the greatest thing ever because it's electric car.
Yeah.
That's it.
And robo-taxi now suddenly is her reason for 57% of the enterprise value in the company over the next 4 years.
Yep. That's exactly right.
Let's look at a couple things here. 88% or so of Tesla's revenue is brought by cars. Okay? They're currently selling for 9.25 price to sales. The average car company sells for 0.5 to 1 time sales. So I know what the Tesla perma bulls are going to say. Paul, it's not a car company. Okay, it's not a car company, even though 88% of Tesla's revenue comes from cars. That's like saying 88% of what Paul says is him being an asshole. So what is Paul?
An asshole.
He's an asshole. Very simple. If 2% of what I say is me being an asshole, then I'm not really an asshole. I have my bad moments.
Asshole tendencies.
Guys, I'm not, these are very fundamental things. That's what I want to go through in this video. Very fundamental beliefs. How can you say Tesla's not a car company, even though 88% of its revenue comes from cars?
And something I find funny is now companies like Ford and Audi and Chevy are now relying on Tesla to use their charging stations. So those are car companies. Those have EV cars. So this is not a car company now. Like, what is going on?
Toyota just announced they're going to have a Camry with a 920-mile range.
Yeah. That's the same
a game
thing
changer.
as this. And you're going to say the technology is not the same. I'm sorry. The technology is not what Tesla's about. It's
and by the way,
down the
if
road.
the technology not the same, the technology is better.
Yeah.
The whole point is to get long range on these things.
Yeah.
Are Teslas cooler than Camrys? Absolutely.
Absolutely.
And I don't believe for a second that somebody's going to buy a Camry. I don't believe that somebody who's a car person is going to pick the Camry over the Tesla. The point is, though, if it can be done in a Camry, what else can it be done into?
It's a car company.
It's a car company. It's a freaking car company. Even if they have their software. Guys, even a software business only sells, we think Microsoft should sell for 6 to 8 times revenue. This is at 9.25. So even if 100% of its revenue was software and their gross margin was like Microsoft's, which was 68%, look at this gross margin.
It's still too high.
It's 1/3. It's 67% lower.
Yeah.
There's a lot of numbers being thrown at you. What I'm trying to say is there is a reasonable price to pay for a great thing. I love my iPhone. I think this iPhone's the best phone out there. Doesn't mean I pay $100 million for it. It means I pay what it's worth. Am I willing to pay a premium over a Samsung? Absolutely. But I'm not going to pay an infinite amount of money. And if you understand investing, you realize that there is a price to pay that is too high for a good thing. But when you only follow the stock price, then you don't think that. And look in the last year. Year to date, the stock is up 132%. When I see this, I think to myself, hype. I think to myself, excitement. People are getting way too excited about the stock and they're riding the momentum. Remember, guys, this company's all-time high was 414 in just November of 2021 and hit a low of 101 a little over 14 months later. 75% drop in a little over 14 months.
And why? Because Elon was going and buying Twitter.
Or that was the excuse given.
Didn't even have a fundamental basis.
And now the stock is sky high again. People are saying it's back. Well, guys, it's not really back.
No, it's
still 40% below its all-time high.
Correct.
And that all-time high was in November of 2021. Let's look at the income statement. Since November 2021, the revenue's up a huge amount. Huge amount. 30, 40%, the stock is down. Why? In the short run, stocks are a voting machine. In the long run, they're a weighing machine. I'm going to go so far as to say this, guys. And I could look wrong here, but timestamp this. The all-time high of November of 414, I think 10 or 12 years from now, we will not be at this price. I do not think we'll be at this price. And it's very likely this will be a 15 or 20 year high. If you don't believe me, go look at Lucent Technologies, Cisco, Micron, Intel, and all the companies that hit massive highs in 2000, the vast majority. Look at Microsoft. Microsoft didn't beat its 2000 high until 2015 or so.
Yeah.
It went from 2000 to 2015 completely flat, even though the business grew by many, many times. Because if you overpay, you're going to waste your time. You're going to end up with hurt. So what has to happen to Tesla to justify a $1,400? Let's do it this way. The stock is currently at 248. So 1,400 divided by 248 is 5.6 times growth. The market cap is currently $800 billion. It has to be a $4.5 trillion company. Guys, Apple is a $3 trillion company. Let's see what Apple did in profit last year. Last year, Apple did $95 billion in profit. So for $4.5 billion to be justified, and Apple made $194 billion. So divided by $3 trillion market cap, assuming Apple's worth what it's selling for, which I don't agree, the company has to make $141 billion. That's assuming, that to me is her base case. It has to profit $141 billion. That's it. It has to profit $141 billion.
By 2027.
I'm just comparing it to Apple. By 2027. All right. What kind of revenue does it have to do to make $141 billion? Well, let's say their margins on the bottom line are absolutely game-changing in terms of the entire market, entire car business. Let's say they have 15% margin. So you take their profit and divide it by 15%, it's $940 billion needed in revenue. They did $86 billion in the last 12 months. So to do 943 4 years from now, divided by 86 billion, that's an annualized growth rate of 82% per year. 82% per year. Let's look at analyst estimates right now. Here are the revenue growth rates. Oh, that's Apple. Sorry, let me go back to Tesla.
So Amazon, who sells everything to everybody, did $525 billion in revenue. And they sell everything to everyone. These guys sell 4 cars, 4 different models.
Right now, 2027, the top analyst has $382 billion for revenue. The median one is 230. Now, analysts, I believe, are overly optimistic because they see a stock going up and they have to justify it with their analyst ratings. So even analysts on the highest side has about 60% less revenue estimate on the highest side than what Cathie Wood is saying for her worst case scenario. 82% revenue growth that she needs to see in order to get that. Okay, fine, it's crazy. Let's say instead of their margin being 15%, they are a software business and they have hardware too, much like Apple. Apple has hardware and software. And what's their bottom line margin? 25%. So let's say Tesla has 25% bottom line margin. Okay. So to make $140 billion, they have to generate $560 billion in revenue. Okay, a lot more reasonable. Divided by $86 billion today, that is a growth rate of 59.7% per year.
Let's not forget there's 6 price cuts this year.
And they've had price cuts this year, but they still need to grow 60% per year for the next 4 years. Guys, I know that the Tesla bulls out there are going to say, this guy is whack. The stock is up from $100 to $2. You're not following the company, you're following the stock. And those are totally different things.
You're following the public perception of the company.
That's it. I think we're going to look back at Tesla many, many years from now and go, wow, how has it not hit 414 yet? And we personally believe that Tesla's worth $50 or $60 a share. as of right now. And that's not, by the way, not as of right now, as of a couple months ago. We haven't updated it for new discounts on pricing. Guys, it's a tough business. The car business is a tough business. It's just a matter, look at Starbucks. They're getting inundated with union requests now. You're telling me Tesla's not gonna have the same thing? Give me a break. So guys, again, if this makes sense to you, if it just tingles and goes, wait a second, that does make sense, subscribe to the channel.